started, I would like to mention a tool called Investopedia. They have a tool where you can literally try a stock market simulator where you can virtually try out investing. It's not actually investing. It is just a demo where you can actually try investing without using actual money. Research and learn before jumping into it. Invest in only things you can know, you know what it is. Learn about the things before putting a single dollar into it. If you can't explain to someone what the company does, please stay away. Growing revenue, they're reducing their debts, they're improving their metrics, gross margins, and so on, and profit margins. Well, maybe you should stay. Obviously, there are companies that are very risky, that aren't really making capital, that have tremendous upside potential, but investing is about what you are interested in personally. If you are interested in high risk, high reward, then small caps. But if you are more cautious, as an example, I know someone, and I mentioned to the person a gold company in 2023, August 2023. It was called Galliano Gold, and it was very cheap, but it was high risk, high reward. And 9 months later, it had gone up 200%. But I remember distinctly, and I also mentioned a couple of others, and they went very well. But I remember that person saying they didn't like that because it was just up and down, up and down, up and down, like constantly. And it was very nerve-wracking. And they are investing in index funds, which is fine. I'm personally into small caps. I like high risk, I like high reward. I don't have any confidence and you don't really know what you are good at. What are you drawn to? These sectors I'm personally invested in, I'm interested in mining sector. Things I can explain easily and I can figure out what they're doing. I'm not investing in quantum mechanics. I don't know how it works. I've heard it explained to me how it works, but it's what? Investing in things I personally know. So as an example, with Galliano Gold, it's a mining company. Obviously there is more to it, but the concept is digging for gold and processing it and shipping it to customer. Boom. But obviously they're the grade of the gold. Is it high grade, which is above 2 grams per ton, to 10 grams per ton, in between that and above, it's high grade. So there are nuances. And with mining sector, there are different ore bodies, different terrains and geography, and there's a lot of things, but you know what the business is doing. It's mining for minerals. Try explaining quantum mechanics to your great granddad. But there's a lot of different philosophies when it comes to investing. You can either be taking massive risks on something that doesn't make value but will have a tremendous opportunity in the future. But there are people that aren't interested in different, they like high risks as well. You have the metrics, you have PE ratio, you have forward PE, you have EPS, you have revenue growth, gross margin, profit margin, operational margins. You have all of these things that are important, by the way. Free cash flow, how much money they have after paying taxes and paying off all the expenses. And then you can't use the same tactic on all companies, because the thing is that you need to look at the management. You need to look at the people. As an example, with the mining sector, there are some junior mining sectors, if you've heard about that. That's basically what people who are gambling addicts used to invest in before crypto. And the thing is, I think there was between 5% to 10% of the companies that are going to be success. The best people are the ones succeeding because it's such a hard industry. And the thing is, when the companies are making revenue, then the only thing you can evaluate the company of is their assets and their people, which are also an asset to the company. Personally, I would say in my portfolio, my own portfolio, I've invested in dividend paying companies, which is roughly 20-30%, and then the rest is medium risk and then very high risk, basically. All of these important things. But I hope you've enjoyed. Take care. Peace. That aren't profitable yet, but they have tremendous opportunities in the future, small caps and penny stocks. Very risky. But you also have value stocks that pay dividends. Or you have these dividend aristocrats that have been. It's about the management. It's about the people that are running the company. Have they been proven to be successful in the past? Are they relevant? CEO have been working as a banker and now they're working in a mining company. That seems a little bit strange, doesn't it? You are evaluating companies. What do you need to do? Well, you don't need to do anything. But what I would do is, as an example, with value stocks. As an example, there is a company called American... Where is it? Wow, where are you? It's called American Superconductor Corporation, with revenue and the fact that it is literally profitable. It's very interesting, and the fact that it's literally the first time it's become profitable this year. That's more like a small cap, but it's actually now profitable. And it's interesting because, in my opinion, it's cheap. evaluating companies, you need to look at your risk profile. Are you interested in high risk, high reward, but you are willing to stomach volatility? As to a friend, say when people are interested in learning about investing in the stock market, there are things you should probably think about. I would, if I were to start investing again, the first thing I would do is do a lot of research. There's a lot of free tools like Investopedia. YouTube is a lot of great content. Knowledge. You can find out what you're interested in. I don't know, take a personality test or like look through the different industries. Are you interested in mining? Are you interested in finance? Are you interested in biotech, technology, robots, what you're interested in or what you have an edge in? Like what are you working as? Are you a welder? Maybe the industry in the mining sector. Or if you're working in a bank, then you know more about banks than most people. Hopefully. Unless you've been sleeping on the job. Return on capital employed. Like how well are they at utilizing the capital they have? Becoming closer to being profitable. Or if they are a profitable company, are they increasing their margins each year? Are they improving their business? Are they attracting more customers? Are they retaining their customers more? And receiving more from the established customer base? Since America wants to become more independent, then the sectors like rare earth and things like that might be interesting. But bear in mind that these are like high risk plays. Like as an example, a very stable company, Coca-Cola. I don't think, in my opinion, unless there's a huge crash or like something massively changes with the company, it's going to be pretty much like very stable. But like companies such as SoFi Technologies or a semiconductor company or another like a health and fitness company might go from like $10 to like $5 and then up to like 50. Like it's very volatile. And if you can't stomach it, please, if you are interested in investing in the stock market, please just invest in things that are stable. Have a low beta, a low volatility, and pays a small dividend. You know, there are like shipping companies that have like high dividends, but you need to know if they can even pay the dividends, like the payout ratio, like how much of their earnings, how much of their free cash flow are they paying out. There's a lot of things you need to think about, and that's why most people should invest in index funds. And it is very logical to invest in index funds because, you know, you're buying a piece of every company, but obviously there's a lot of bad companies in that list as well. But overall, like the S&P is, I don't know what's going to, like it has performed very well throughout the past, but it doesn't mean it's going to perform well in the future. But I'm more of an individual stock picker. I pick stocks based upon research about trends. And obviously sometimes it goes well and sometimes it goes bad, you know. But I personally like being more in charge of what I'm invested in rather than like having someone invest for me. So that's just most of investing is learning about like the metrics and formulas used, but also the mental. Because, you know, like these couple of weeks, the markets, like as an example, there's a company I was interested in called LifeMD. In January, the company was valued at $5 per share, and it went up to $8 a share, and a couple of days ago it went to $4.50. For no reason. And you will have to be able to stomach that. If you are interested in small caps and penny stocks, if you are a very conservative gentleman or woman, doesn't really matter, then maybe like more risk averse companies, more like established brands and stable, like utilities as an example, obviously, or Coca-Cola. But you know, with high risk comes great reward, and with low risk comes low reward. These are things you need to value. Like, are you interested in what are you interested in? Hope this has been interesting and helpful. I hope you've gained some value. Have a wonderful day. Peace.